Hello, trader. Gary Wagner here. It is the Labor Day weekend, the week ending on September the 3rd, 2021, and this is the Daily Report, our weekend review. And this will be a special edition of the weekend review due to the events that have transpired over the last 3 to 4 weeks. We will look at the effect of last month's jobs report. We will do that along with the fact that Powell spoke just about a week ago, virtually at the Economic Symposium, and Friday's jobs report, because collectively they tell a story about how the Federal Reserve, along with other central banks worldwide, have been working with their respective countries to rebuild their economy and have an economic recovery in the midst of an ever-changing set of variables due to COVID-19 and now the Delta variant of that. Within the last month, since the August jobs report 1 month ago to Friday's jobs report yesterday, we have seen a series of events that have definitely caused central banks worldwide to reevaluate their current monetary policy. It has been said that bad news is good news for gold and silver pricing, and such is the case today. The dollar was very little unchanged, down about 0.1%, providing a little bit of tailwinds, but gold rose substantially, up over 1%, $18.40, and is currently at $1,829.90. We, of course, are long gold. We'll talk about that in detail when we look at our charts. And silver gained well over 3%, 3.67%, and is currently tracking at 24.79.5 cents, basis the most active December contract. Which brings us to our first chart for today's show, a daily candlestick chart that has a Fibonacci retracement as well as some text markings and moving averages. If you recall from last week, we noticed our first real shift in market sentiment in regards to what Powell's speech would indicate. Our premium subscribers know that we had been addressing the fact that we thought the most prudent move would be to position ourselves from the long side prior to Chairman Powell's speech, which is why on Thursday, August the 26th, we issued the following trade alert that can be easily visible on the bottom right-hand side of the screen right here. To this date, we are still long December gold from $17.95. We are long December silver from $24.06. After pulling profits of about $2,200 on Monday when we went into September silver and then rolled that over into December. When it came time for Powell to actually come out and speak, it did have an extremely bullish impact on the market because on a technical basis, we saw significant bullish indicators. The first of which was that gold actually opened above the 50-day moving average and then traded and closed above the 100-day in blue and the 200-day moving average in magenta. Which brings us to this week. And if you recall, on Monday, the market did open above Friday's close, but closed well below the closing price. We had a muted trading range throughout Monday, Tuesday, Wednesday, and Thursday up until today's action. The one takeaway was that it consistently traded in terms of its open and closing price above both the 200 and 100-day moving averages. Which brings us to today, Friday, the 3rd day of September, when August's job report numbers were released. Anticipation, 700,000 plus new jobs added, actual just over 200,000. It really highlighted and emphasized how deeply we underestimated the damage both to lives and the economy that this Delta variant has caused. In conclusion, where do we believe gold prices will head from here? Obviously, we are spending more money than anyone had anticipated, and that money has to come from somewhere. And the place it will go to is going to be the national debt that continues to grow at an incredible pace along with the balance sheet of the Federal Reserve. Which brings us to the upcoming FOMC meeting and what actions the Federal Reserve will take. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Tuesday for the next daily update and review. Bye-bye.